Welcome to the Fear and Greed Afternoon Report for Monday, the 27th of March, 2023. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 finished the day up just a touch, 6 points or so, to 6,962 points, with the utility and real estate sectors leading the way. Energy stocks were among the worst performers. Among the large caps, the banks were mixed, so too the big miners, the big supermarkets, and Telstra outperformed, while Goodman Group was the best of the large caps, finishing up more than 2% to $18.84 a share. Story number 2, there was plenty of corporate activities today. Premier Investments, which owns brands including Smiggles, Peter Alexander, Portman's, Just Jeans and Dotti, said sales rose 18% for the half year ending 28 January, with online sales accounting for about 1/5 of turnover. It posted a record profit and paid out a special dividend. Its share price, though, fell 2.5% today. Funerals companies Invacare said private equity group TPG's $1.8 billion bid is too low and doesn't offer enough value for shareholders, but it will grant partial due diligence to TPG. Its share price was higher today and is trading around 25% above where it was before the bid was made earlier this month. The share price in lithium developer Lake Resources fell 13.5% after its non-executive chair, Stuart Crow, sold just under 8 million shares. Australian Clinical Laboratories bid for its larger rival Healius received a setback after 2 of the larger shareholders of Healius opted not to support the deal. Healius today said it will write to the takeovers panel to attempt to resolve what it calls deficiencies in the bid. United Malt Group, which provides malt for brewers and distillers and was spun out of GrainCorp 3 years ago, went into a trading halt today with media speculation saying it's about to receive an offer, and Ampol dropped more than 1% after warning that an outage at its Lytton refining operations could hurt its earnings by up to $50 million. Story number 3, in Canberra, the federal government has won support from the Greens for its emissions reduction plan. After agreeing to a hard cap on emissions, which targets coal and gas projects, the deal will ensure the safeguard mechanism legislation passes Parliament this week, forcing the country's 215 biggest emitting facilities to cut pollution by nearly 5% each year until 2030. Also in Canberra, opposition leader Peter Dutton said the federal Liberal Party won't be revealing what it thinks Australians should do in terms of voting on the Voice referendum until after the Aston by-election. Dutton is desperate to win the suburban Melbourne seat, recently vacated by former frontbencher Alan Tudge. Also, South Australia became the first state in Australia to legislate an Indigenous voice in a special sitting day of state parliament yesterday. And finally, the Prime Minister was busy today welcoming former US President Barack Obama ahead of his speaking tour. Story number 4, Bank of Queensland said its chair, Patrick Allaway, will step in as chief executive. It's unusual for a chair to step in, though not unprecedented. It happened last year at AGL Energy when Graham Hunt became CEO after the sudden resignation of Brett Redman. Allaway takes the job after former CEO George Frazee was forced out last November. Allaway hired Frazee in 2019 and the former boss followed a growth agenda, including the acquisition of ME Bank in 2021 for about $1.33 billion, which was ultimately loss-making. Allaway will stay in control until at least the end of next year after a suitable CEO couldn't be found. Since its most recent peak in October last year, Bank of Queensland's share price is off about 33%. And story number 5, some of Wall Street's biggest banks, such as Goldman Sachs, JP Morgan Chase and Fidelity, are the big winners from investors pouring cash into money market funds rather than deposits. Over the past 2 weeks, the collapse of 2 regional US banks and the rescue deal for Credit Suisse has raised concern about the safety of bank deposits. According to the Financial Times, more than $286 billion has flooded into money market funds so far in March, making it the biggest month of inflows since the depths of the COVID-19 crisis. Now, these are managed funds that invest in very liquid products like cash management accounts and bonds. Helping convince investors is that yields available are now the best in years as they rise with interest rates. That's it for the afternoon report for Monday, the 27th of March, 2023. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, Twitter and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.